Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 6th of December 2016. What we're going to look at today is a trap actually setting up at the hard right edge and what that really entails, how you do that analysis, and this particular trapping question is what I've referred to many times now as a trap break pullback that's potentially setting up. It may not yet, but this is how we analyse traps unfolding at the hard right edge. We have a level of historical support. Okay, so price comes down to it, bounces off it, comes back, bounces off it, and again comes back and bounces off it. Now then, trading traps is all about employing the tactical strategies of the vast majority of traders that exist and then hacking their particular strategies and taking advantage of those traders once they are on the wrong side of the market and caught and trapped. Okay, now the way we do that, it might seem like an enormous task and one that is insurmountable, but while there are an unlimited amount of trading strategies, there's not that many major core disciplines, fortunately. So one of the core disciplines that we're going to focus on today is how traders tend to behave off levels of support. Okay, so this is the hard right edge. So it's essentially this big void that we all have to the side of our charts, and then the price action in the here and now, and then the historical analysis that traders do to get to the point where they notice something potentially setting up. You've probably heard that term a lot if you've been around trading any length of time. Like, do you have a setup? Is there something setting up? And what that basically means is that price is developed in such a way that, and it's reacted in such a way that you potentially have a trade developing. Now it hasn't yet come to fruition. It's not telling you to enter at this moment, but something's setting up and you need to have eyeballs on it and get ready to potentially act. Now, one of the ways that traders will respond in a circumstance like that, if they're trading support and resistance, is if you have a level that's been touched once, twice, 3 times, they do that analysis and go, oh right, a triple bottom, that's a great place to go long, right? And the quality of that level is important because people need to be able to see it, and then people need to have the ability to recognize the pattern. So if it's unclear, if you've got like a level that's got like loads of trading through it, it's harder to distinguish the level versus when you've got a perfect, excuse my drawing, but you've got a perfect level like that, or near as damn it. That's a lot easier for you to spot, and that'll make the level trader a little happy chappy, right? Or happy one. So at the point of getting here in your analysis, what's then vitally important is what actually happens when price returns back to the level. Now it could be that this bounces off here and goes, a couple of hundred pips or better, and it's a complete resounding success for those traders. That's absolutely true. But what we're doing is we're just watching and waiting in the long grass, if you will, right? Hunting our prey for this to actually go wrong. Now, when I mean go wrong, I mean that it showed them just enough. It confirmed that the move was looking like it was going to make money, as it historically had done. And maybe they'd been involved as well. Maybe they bought in here initially and made money. They need to believe that that's starting to occur again. So what will resemble price action that will actually get them to act? Because if price comes screaming down through the level, no one's going to buy. I mean, people do place orders, but very few people do that for any length of time because they get crushed. As we know, levels do not hold. It's not perfect science, so therefore people just get run over too many times. They go, screw this, I want to see some type of confirmation at the level. And you'll hear people scoff at the idea of waiting for confirmation, but you try just placing orders and see how long that lasts. And you if you've done trading for a length of time, you know that to be true. So what what starts to happen then is you start developing skill sets around how price reacts at the level, and then you start to develop entry strategies. So if you have, in this case, you have a couple of dojis, right? You've got a spinning top and a nice doji, okay, and it's a nice swing point like that, and then you have a positive candle. You know, these are the types of patterns. They're not always the same, incidentally, but they are presenting a potential for the trade to work as it had done historically. It actually looks like it's starting to work, and what I refer to this as is entry cheese. This is the cheese, the price action that takes that analysis that you've done, right? So you got a triple bottom, you think, yeah, this is a great buy, but I'm not going to pull the trigger yet. I'm actually going to wait until I see some type of confirmation. This is that confirmation. This is what gets you in off the sidelines and gets you to spend some money, gets you to take that risk. Because without that final element, you won't come in off the sidelines. Your money essentially stays nice and safe in the account, right? Well, that's no good to anybody. And if you consider the game we're in is a transfer of accounts from one group to the other, right? The people who know what they're doing versus the people who don't. The interesting thing about that, though, is that the people who don't oftentimes believe that they're doing the right thing. All the books, textbooks tell you to buy triple bottoms, quadruple bottoms. Like the more levels hit, I'm sure you've heard this, the stronger it gets. Nothing could be further from the truth. But that's the narrative that's out there in the retail trading community. So people buy into it. So when you look at that triple bottom and it starts to react and bounce off that level and look for all the world at the hard right edge like it's going to go up, because this is all the information we know at this point. You commit your money, and then boom, the market goes strongly against you, trapping traders in there. And the reason why we know they're trapped is because humans are not very good with discipline, right? But very much start to hemorrhage outside of any processes that they had in place prior to it all going wrong, right? You start off with the best of intentions, but it's when the market goes against you that you may start to hemorrhage outside of that. So you start cancelling your stop loss, maybe you add to your losing position, etc, etc. And I'm not saying that everybody does that, but a group of people do, because humans are terrible with discipline, broadly speaking. Never mind when there's money on the line that you've worked hard for, and you don't want to lose it. And trading very much promotes that sense that you know, you don't want to lose your money, right? You don't want to be a loser. You want to win every time you take a trade. It's very uncomfortable losing. So rather than, you know, feeling that pain, you'll delay it. So you'll start cancelling your stop, etc. But more broadly, humans are bad with stuff like this, right? Diets are bad in the Western world more broadly, right? People don't really exercise as much as they should. People have bad habits, drink too much alcohol, smoke cigarettes, don't invest, don't save money. All of these things, you know, lead to the vast majority of people struggling with this stuff when they come into this trading arena. Now, that being said, some people may stick to it, but you know, we can then understand the order flow when price goes down to that level in more detail too, because if that does break down below that level, the stop loss is below there, so that's going to accentuate and accelerate any selling. There's other things going on in there as well, but basically trading traps is essentially me hacking the major core strategies that the vast majority of traders use, irrespective of the type of strategies that they employ. There are some core principles, and there aren't many of them, and that's the good news, so that we reverse engineer that, hack their system, and then trade against their position. Okay, so I hope you found that helpful. If you'd like to learn more about how to hack other people's trading strategies, click the link below, and I'll see you on the other side.